All right, good morning, Making Moves family. We are doing a little something different today. My man Tim Vest is live on site. I can't disclose the location, but he's also with a good friend and broker that's based out of Charlotte, North Carolina. He is the managing partner of Kyle Chase and Company. Brokerage based out of Charlotte, North Carolina. He's done about $2 billion in multifamily transactions. Kyle, man, thanks for joining us today. I'm really excited to have you on the show. And we really want to dig into kind of who you are and what you've seen in the market over the last, let's call it just the last 6 months, because a lot has changed over 6 months, with interest rates and buyers and sellers and everything changing. So thanks for joining us today. Why don't you give everybody a little bit of an introduction, a little better than I can, of who you are, what you do, what you stand for.
Yeah, absolutely. Thanks, Tim. So my name's Kyle Chase. Started K Chase and Company.
Chase, there it is.
There you go. You're fine. Really about little over a year ago. And so I've been in multifamily industry for the last a little over 10 years. Spent a couple of years at Greystar down in Charleston at the corporate headquarters. And then just had an inkling to do something different, and met a great mentor and former partner and got in the brokerage world back in 2015. And we kind of got acquired, / merged with another company, regional firm, in 2017, which led me to kind of open an office in Charlotte. And so I moved from the beautiful city of Charleston to Charlotte, which was hard, but it worked out career-wise. Was there for a little bit, and then a large brokerage firm, Cushman & Wakefield in the Southeast, gave me a call, and just an opportunity I could have passed up. So I actually worked for them for year and a half or so, doing institutional multifamily brokerage, and then COVID happened. That just changed everything, and all of us were sitting here just being like, "Oh man, don't think we're going to do a deal for a while." And I was like, all right. So I started to think of options. Thought I was going to invest. I did that for, 6 months, but just couldn't find anything. And at the same time, had just too many opportunities I was saying no to. So I started my own company, and it was just me for a little bit. Now we're 4 guys based in Charlotte, but kind of do brokerage, multifamily brokerage throughout the Carolinas.
Yeah, that's incredible. I love your story.
Yeah, I love that. It's such a common thing. It's like, and then COVID happened.
Yeah.
It's like, same thing, right? It's like hey, I was going to buy some properties in 2020, and then COVID happened. And
now I regret not buying more property in 2020.
Yeah, no kidding.
Yeah,
no kidding.
Trust me.
Yeah, but man, way to like, I don't know, man, just like take that kind of situation and go set up your own shop and get things going. And you're doing well now, right? It sounds like things are growing.
Yeah, no, it's been great. And, I've always given the advice, and probably took the advice of, hey, life gives you lemons, make lemonade, right? Something along those lines. And I've always wanted to own my own company, and saw the opportunity. I said, this is it, right? Sometimes things don't line up perfectly. Sometimes they do. And I saw the opportunity, I took it, and it's been great. So yeah, a lot of growth happening. And sometimes I feel like I'm barely keeping my head above water, but it's good growth, and I'm very excited for the future with the company.
That's awesome.
Yeah.
Nice. So, all right. We want to talk to you a little bit. I mean, a lot of listeners on this show, whether they're watching it live, we got about 20 people watching it live right now. And there's going to be a ton more that watch it later on from the recording. Why don't you talk to us a little bit what you're seeing from the brokerage side of things with what's happened in the market in the last 3 to 6 months with the change in rates. More recently, there was a 75 basis point raise in June and in July. What's that really done from your perspective on how sellers are reacting and how buyers are also reacting to the same situation?
Yeah, so it's been, I think the best word is challenging, right? Just like COVID, when COVID happened, and you just had a influx of money coming into the markets, and interest rates go down. Well, kind of the counterbalance of that is what we're having now with interest rates rising. And so, yeah, it's been challenging. Obviously, interest rates, impact a lot. And what we're seeing right now is really call it above 100 units, but really any kind of space for multifamily. Investors are just, a lot of them are on the sidelines. They don't know what's happening. They just, they can't predict the future. And when they can't predict the future, there's like, all right, I'm going to sit on the sidelines, take some plays, watch some plays for a little bit, and just, they're not doing anything. And then at the same time, you have sellers. Most of them still want, I would say, 2021 pricing, right? When there's so much money out there, wanting 3.5 caps for deals, and you're just going, yeah, that was a short period of time where you could have sold, and you probably should have sold if you were thinking about selling, right? But no longer the case. And so that's been hard, challenging on that side. So not only do you have buyers that can't a lot of times make the numbers work because of higher interest rates and a higher cost of capital, you really have the other side of it where sellers are kind of like being, I'll say stubborn, but they're saying, hey, my property was this last year, I want this. And so we're having a big, call it, buyer seller gap in the market. And so I think we're starting to see a lot lower volume, seeing, deals just, I say, don't make sense from things I'm valuing for what owner or sellers want. So I do think we're going to start seeing lower volume here for a little bit until I think things balance out as far as interest rates. And I can't tell you how long that's going to take, but once I think that happens, I think you're going to see an influx of buyers and sellers and things start happening again. But guys, there's still deals out there. Don't get me wrong. I mean, selling a slew of them right now. And it's been a matter of just sellers' expectations I think are reasonable. And then, the buyers that are there, they're willing to, do it. And quite frankly, there's less competition out there because so many people are on the sidelines. And so, they're able to get deals done and maybe slightly at a discount than, 6-12 months ago.
Yeah, no, man, you hit a lot of nails on the head there. Like, I absolutely love your approach. I love how you just explained everything, because on the buying side, we're seeing that all across the board. I mean, there's just really not a whole lot of competition now, and sellers are more willing to be lenient on price and terms than they were 6 months to 12 months ago, because we can all agree here that the peak of the market really was like December 2021, January 2022, before rates started to really go up, before the fear started to set in that inflation was coming. I mean, it was kind of a tossed around word for a while. It was a dirty word for, naughty word. And now that we're seeing kind of the impact, like the 6-month delay of all of these things starting to pick up, you're right. I mean, there's not that much competition right now because we're submitting on offers still because, hey, we just write it into our numbers, right? If the interest rate goes up, we still underwrite to our investor returns at the end of the day. It's not like underwriting for multifamily acquisitions is like algebra, right? You're solving for X, and X is your investor's expectation in return. So as everything else changes in the equation, you still have to just meet X and whatever it takes to get there. Now, we have seen a lot more investors or sellers, be more open to, well, how does seller financing work? They're starting to ask those questions now because they're realizing, hey, I could still get the price that I want that's relative to the 2021 pricing, but I have to give up a little something because I know I missed my window already. And that really helps us out on the buy side because we're able to reduce our cost of capital. You'd be surprised what some people are willing to take as interest in promissory notes and things like that for seller financing positions. Like we're talking, 3, 4, 5%, and debt is, kind of in that 5 to 6% range. And investor returns are going to be significantly higher than that. So what are you doing? And Tim, what the hell are you talking about? We're talking about what Kyle had mentioned, the cost of capital. As your cost of capital goes down, you can pay more for a property, right? That's the whole reason why people were paying such exorbitant numbers in the last 24 to 36 months was because the lowest cost of capital we've ever seen, with bank debt being in the 2-3% range, you can pay significantly more. So now you just have to kind of think outside of the box a little bit in order to figure out how to make this puzzle work and get the, bridge, exactly what you're saying, bridge the gap between the buyer and the seller expectations.
Yeah, 100%, Tab. And I think I think you kind of said it. Being creative right now is really, I think, an asset and something to be done, and that's really what's getting deals done right now too. If people are getting creative, I mean, we're a couple of the other deals we're doing. There's been these hiccups and just these things that kind of you'd be like, okay, these didn't matter before, now they do matter, and both buyers and sellers being willing to meet at the table and be like, okay, let's get creative here, right? And I try to facilitate that process, throw some ideas on the table, just try to get a deal what makes sense for both parties to come to an agreement and get the deal done.
Yeah, I think that there's just a lot more. There's a lot more room for negotiation now. Before, like Tim Best says it all the time. It was like, over the last 12 to 24 months, if somebody didn't perform on a deal and they had hard money in it, sellers knew they could just put it back on the market, get an offer in 2 days, and then make $1 million more because the market went up overnight. That's not the case anymore. We're moving back to fundamentals. We're moving back to where you have to analyze a property without these, huge exorbitant rent growth numbers. Now, obviously, there's a caveat there with, doing value add properties, and you're going to have higher growth in years 1 and 2 while you stabilize it. But the future projected growth after the stabilization period is not going to be your huge, rent bump.
Right. No, 100%. And so you asked me some things that changes again, like you said, last 3-6 months. I'll tell you, like you mentioned before, but even before COVID, but really during COVID, right? I mean, there was tons of hard money being thrown out to win deals. In day one, hard money, and those numbers kept increasing. Well, that works, right? And when you have interest rates that are decreasing, because in reality, okay, you don't perform as a buyer, you don't perform. Well, the seller gets that money. Now he takes it to the market and the property's worth more.
Yep.
In a rise interest rate environment, totally different story, right? And so what we're seeing is hard money's becoming, yes, still out there, depending on the asset size, location, and quality, and all those other factors, but much less prevalent. And really, it's the terms, right, that are becoming the key factor. So, shorter DD timeframes, and just the surety of close from a seller's point of view is really a key and critical item to win deals right now.
Yeah, you're speaking to the choir. I mean, we Tim and I got some practical examples. Like a year ago, something was coming down to the crunch time, and the seller's just like, man, I got your hard money. I'll just take it back and take your hard money. And I'll put it back on the market and make more. But recently, what you're seeing is like literally sellers are saying, he's like, I know your money's hard, but I don't want your hard money. I want this thing to close. So it really has changed. And it's honestly, it's making, I know folks are kind of afraid to go after things because of, I don't know, uncertainty or whatever. But at the same time, your leverage and negotiating power, once you get to the, the LOI, the PSA stage and beyond, has actually changed quite a bit to the buyer side. And, so if you can, like Tim's saying, if you can underwrite to those returns and you can make it work on paper and build it in, then I think it's a great time to be buying right now. I think it's absolutely a great time to be buying. There's a lot of fundamentals behind the scenes as well, as far as like rent escalation and things like that. And the fact that, less people are purchasing homes because they can't afford to buy homes. It's flooding the renter market. So I think there's a lot of fundamentals there with that make it a really good time to buy rental properties, quite honestly.
Yeah, another thing that just kind of popped into my head is like, I think investors over the last 24 months got really spoiled with how things were going in COVID. The expectation was set that they could buy something and sell it in 6 months and make a shit ton of money, right? And real estate was and always is a long game. And we're moving back to those fundamentals, and you have to have those conversations with your investors of like, well, yeah, I know that if you invested in the last couple of months, you probably got a 2, 3, 4x equity multiple just because of what the market did. That's an anomaly, right? I mean, this is not the norm. We're moving back to what real estate was always intended to be, and that's long-term cash flow appreciation and depreciation, right? And I really appreciate that we're moving back to this model because it brings a sense of security and a sense of safety, because most investors know real estate that way, right? And if you're trying to raise money from an investor that's used to understanding the long-term potential of real estate, it's like, oh, hey, like I know everything was a little crazy, but we're kind of back to normal now. And when you relate it, and I can show the data too, it's like when you relate it saying, well, interest rates today are just what they were before COVID. So it's really not that bad. It's like, wow, we're back to 2019 again. Big deal. It's not like we're seeing 12, 13, 14% inflation rates like what was it, the 70s and the 90s or something like that. I mean, that's like that's a whole nother level, right? But all we did is we dipped way down and now we've come back up to where we were before. Like it's okay, guys. If you made a lot of money in the last 2 years, like congrats, good for you. But now we're back to where it was designed to be.
Yeah, 100%. And that's the funny thing I see too, right? And I wasn't that long ago where these interest rates were, these are norm. It's still, historically, I say pretty low. And it just, when you have those extremes of just such low interest rates, I think it just becomes, okay, we just need to find the new normal, or that normal again. And like I said, right now, people are on the sidelines, but once we kind of get to an equilibrium, or we start, maybe things slow down as far as the interest rate increases, I think you're still going to have a flood of people, coming in into multifamily specifically, just because it is a darling asset class. It's a protector of inflation, but it's just such in demand. So what Tim was saying, just, interest rates rising, home values have increased. People are just not being able to afford a home. So they're renting, they're going to rent longer.
Yeah, especially in markets with high high population and job growth. The Carolinas being, Tim and I, we live, you as well. We all live in the Carolinas, and for a short period of time there, we were looking at investing outside of the Carolinas. I was like, wait a second, we live in like two of the best states in the country to invest in. The Carolinas, Texas, and Florida are like everywhere right now. I mean, yes, there's other pockets of great places to invest, but those are the most commonly known of the most growth, right? Those four states right now. And we're like, why are we looking anywhere else? So I want to ask you, with kind of how everything's been changing, and how everyone always talks about, California buyers and New York buyers and things like that. How have you seen somebody like Tim and myself have a competitive advantage because we're local in the market?
Oh, that's a great question. I think it's what you finished there with, because you're local to the market. You're there, you're able to see the asset. When I'm selling a deal, right, a seller wants that assurity of close. And there's terms, but also just seeing the asset, right? You don't know how many times I've had deals where, in best and finals or whatever, where the guy just wouldn't see it and said, if I get the deal, I'll come from California or New York and I'll come see the deal. They don't get that shot because the seller wants someone to seize the deal. You're local, you see what's happening. You're able to, I'm able to meet with you, right? I get to know you. I get to see you on a personal level. So therefore, I'm going to give you some off-market opportunities. We started building that relationship versus a New York guy or a California guy. They're not coming in town very often. And even so, they tend to be, I would say, even on them, not putting those guys down at all, because, they'll still buy, and I still, like everybody, right? I'm a broker at the end of the day, but, a lot of times it is harder for them because they, it is to have that travel schedule and being like, all right, that's a 3-4 hour trip down there. I have to schedule it versus a guy that's local that's just being like, I'll come see it tomorrow.
Yeah, no, I agree. Yeah, I think you touched on something, a couple things that are so vitally important in this industry. And like, I know it's like beating a dead horse, but it truthfully, at the end of the day, is all end all, is relationships, right? Real estate is a relationship business. It's all about, meeting people face to face, understanding who they are, what they like, and, the certainty to close. And, myself and Tim and a couple other people, we've spent a significant amount of time together. Who we're connected to. That when we submit an offer on a deal, that we'll be able to close and we'll be able to put the team together to get it done. And there's nothing more valuable than going, like, for everybody else listening to this right now, there's nothing more valuable than going to the market you're trying to buy stuff in and spending time with the brokers you're interacting with all the time. You're not just an email, and you're not just like a phone number anymore. You're a person. You've interacted. It's just a whole different connection that you have with the individual. And brokers they want you guys need each other, right? Brokers, they need sellers, they need buyers. They are the middleman that are going to help you get what you want, right? Help you accomplish your goals. So go become friends with these guys, because Kyle, you're not that bad. You're a pretty good guy. I like you.
Appreciate that.
I mean, yeah, you go have a beer, you go have a coffee or whatever, eat some food. Kyle brought me Chick-fil-A when we were doing inspections on another property, so thankful for that. Gotta learn the Chick-fil-A minis. Yeah. But like, seriously, that's all it is at the end of the day. You don't need a relationship with every single broker in the market. You just need really good relationships with a handful of them. That's it. Like, focus your energy.
Yeah, I agree, Tim. Well said. And even like getting with brokers in the market as well. Like Kyle, I'll use where we are right now. We won't talk about exactly where we are, but using where we are right now. Kyle brought this to me a couple months ago, maybe.
Yeah.
And I was like, I don't know, maybe. But then Kyle started to talk to me about some things. And guys, I know this area. I know where we are. And I know this area pretty well. I know the areas around it pretty well. But Kyle started to bring to me another level of analysis and detail that I wasn't aware of in a market that I feel like I know pretty well. And I was like, all right, I'll check it out. And as I dove into what he was talking to me about, I started to see it, right? I started to see it. I started to understand it. I started to find comps in the area that made this whole thing make a whole lot of sense. And all of a sudden, it's like something I probably wouldn't have looked at, because Kyle brought me that knowledge that he put into this whole thing. He was able to expand, on something that I felt like I knew pretty well, just from, the fact that, I've been in this state for 47 years and I've been to this town right here. I can't tell you how many times. But yeah, so, having that level of knowledge and also, I guess, being willing to listen to that level of knowledge, right? Like, not,
Takes two to tango.
It does.
Yeah. So, and it's always an interesting conversation, right? Like, Kyle told me some stuff. I challenged him on it. He kind of challenged my assumptions. And at the end of the day, it's like, hey, well, just go look it up. Let me know if you're interested. And by God, I go home, I look it up, and I'll be damned if he wasn't 100% right. So, hey, learn something new right there from this guy.
Yeah, it's definitely it's definitely a help me help you situation, right? I mean, everybody has something to benefit here. The seller gets to sell their property. We get to buy their property. You get to make a commission. Our investors get to make money. Like, everybody wins across the board here. So it's beneficial to your time to build these relationships and be very specific with what you're looking for, because Kyle can't put a deal in front of us that he knows that we're going to actually buy and look at, until you have those conversations of what we do and why we do it. Now, Kyle's like, oh, I know the perfect guys to call now for this specific deal, because I know exactly what they're looking for. I know their track record. I know who they're connected with. I know that they're going to close on the deal. And when you present that offer to the seller, who do you think the seller's going to listen to? Obviously the broker, right? That's the trusted individual. And as a buyer, you have a good relationship with the guy, he's going to sing your praises, as long as you're somebody that does what they say they're going to do. And I mean, it doesn't hurt to be a likable character as well. It's like, if you're the guy that's difficult to work with, you're going to build a reputation of being somebody that's difficult to work with, and people are not going to want to work with you. Commercial real estate, multifamily, especially in the Carolinas, is a very, 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 very small community. Everybody knows everybody. So as soon as you ruin your reputation once, it's gone forever. You might as well look for a new market.
Yeah.
Well said. And you're 100% right about being easy to work with.
Yeah. Hey, so Kyle, let's, if you don't mind, and again, we won't talk about the specific area, but when you were talking to me about the one that we're on today, like, one of the things you brought to me, because everybody talks about like housing shortage, but this specific market right here, what you told me, what was the number that you threw out there in the specific market? This market is how many units short?
Yeah, so it's about 5,600 units, rental units short, and about 6,500 for sale units short in this market. Has an occupancy of 99.5 to 99.9, depending on which way you look at it. And at the same time, no units in the pipeline for the next 5 years. So
Right.
great market economics and fundamentals.
Yeah, and guys, this isn't one of those, like, you can probably tell, but this isn't one of those, like, this isn't Raleigh, right? This isn't Charlotte, but there's all of these pockets like that around the Carolinas, that, and quite frankly all over the country, that make a lot of sense when you start to dive into those numbers, right? Like 5,600 rental units short, 6,500 houses short of the already in place demand in this market, which is growing. This is a growing area. Population increasing steadily every year. And you start to dive into those types of things, you start to identify other markets, which quite frankly may not be, the top 10 on, I don't know, who the real estate today, list or whatever that comes out every quarter or whatever. And so, Tim was talking about at the beginning of this podcast or this show today, it's like, how are you finding deals? How are you making this happen? How are you doing that? And it's that kind of stuff, right? Like, you're identifying pockets where there's a strong demand, like these right here right now are going for about 300 to 400 less than where they should be, probably, based on fundamentals. And then there's some other strategies here as well that you could even explode that even more. But at the end of the day, buying in demand areas, as long as you can make those interest rates work, it's a pocket, it's an area that just makes sense. That's all I got.
100%.
Yeah. No, I mean, actually, would you consider this market a tertiary or secondary market, Kyle?
In the Carolinas, I would consider it tertiary.
I agree. Okay.
Yeah. I could argue it's kind of on the verge of both. Only because of, without obviously saying it right, but you have a very good economic base here. But just, so I'd say it's on the verge, but, I could see it both ways, but I kind of lean a little bit more tertiary because of some factors versus the others. But yeah.
Right.
I'm with Tim. I would agree. I think this is a tertiary market all day. But you are right. There's some unique economic factors in this area that make it a very strong tertiary market. There's even though it's tertiary, there's a huge demand here, and there's some fundamentals that we'll get to when we share this thing that make this an extremely strong area.
All right, Kyle, I got one more question for you. We're kind of coming close to the end of our time here. So for a lot of people out here that are like, oh my God, brokers are the best thing since sliced bread, now that we've heard Tim and Tim interview Kyle, what are some things that people that are listening or watching the show, what are some things that they can do to differentiate themselves? And what are some things not to do that immediately cross them off your list?
Great question. I think we've hit on a lot of those points, right? I think being friendly, being someone that just good, I say a good hang, but a good person that that's nice to talk to, work with, and so some of the things I look for in regards to that, right? Especially when I'm like, I'll say a new person and I'm trying to like test them out, be like, okay, is what they've told me as far as investment criteria or willingness to buy deals true, right? And so sometimes I start out with maybe, an off-market, deal, or even just a listing, be like, hey, you should check this out. And I would say the ones that I really like are the ones that underwrite it and provide quick feedback in, call it 48 hours, 72, in a short time frame, but not just be like, not for me. They provide feedback, right, on why it's not for them. And so that way I'm learning about them as well, right? It's like, okay, that makes sense. Let's try another one. Okay, does that work? Does that not work? And now it's starting to, again, we're playing that dance game, but I'm really starting to understand you. You're being quick. And that way I know if I get an off-market opportunity, a lot of off-market opportunities, there's a short win. And I want to make sure you are going to be quick on your feet, not taking a week or 2 weeks to really, dive into it, because that's not going to fly. That deal will be gone by the time you actually underwrite it. So those are like really the things I look for. And then obviously it's just I'm big on integrity. So just doing what you say you're going to do and just being, true and honest. For me, that's just, that's a critical factor. that I look for as well.
And I think you missed one in the top 5 there. I think having the first name Tim is in the top 5. Right?
Hey, that helps.
Yeah.
I feel like an outcast on this show. My name's not Tim.
Somebody put in the comments, "What's up, Chads?" And I was like, "Oh, it's "What's up, Tims?" Yeah, I'm really glad that you said that, because that's one thing that we coach we have a coaching group, Making Moves Mentorship, and that's one thing that we absolutely push our students to do. And I can show you multiple screenshots of like where it's actually worked, where our students are underwriting deals. I provide the feedback on the underwriting, and we come up with a list of questions. And I'd say, call the broker right now. After we hang up this call, don't email him back. Call him, get on the phone, start to build that relationship. Tell him exactly why you don't like this deal, and tell him what you are looking for. Because the more you do that, the more times that you can spend time with these brokers, you could build a relationship, and you build up your reputation with them. And like, it's like clockwork. It's like, a couple of our students did it like 1 or 2 times, and they went out and did like a property tour that they submitted on. They didn't get the offer, but he was like, "Dude, I did it 1 time, and now they're sending me all this off market stuff." I'm like, guys, real estate's really not that complicated. Just do what I'm telling you to do. Pick up the phone, make some phone calls, go do these property tours, and build the relationships with people. That's it.
100%. Absolutely right.
Cool. Well, hey, Kyle, I don't want to take up any more of your time. I really appreciate you joining us today. I think this was a really good show. I hope that a lot of people got a lot of value out of kind of seeing your perspective, because you deal with the buyers and the sellers. Really appreciate all the deals that you bring to us, and, looking forward to do more business with you in the future.
Absolutely. Likewise. Thanks for having me.
Yeah, Kyle, thanks for joining us today.
Yeah, and before we sign off, real quick, let everybody know how they can get in touch with you so that they can get onto your list and potentially start working to build a relationship with you.
Yeah, absolutely. So you can go to our website, which is just kchase.com. So that's kchase.com. My email is kyle@kchase.com. 2 of the best ways. My phone number is also on the website, so you can find I'll make sure you do a little work to give me a call though.
Yeah, and hey, just so you know, if you're competing against us on the deal, we're probably going to win that. We already have that relationship first, guys. All right, thanks. Talk to you later.
All right,
take care, guys.